Cryptocurrency investors and firms in the UK are expressing frustration at being left behind their US counterparts. This is of course after US regulators have approved several mainstream products that have made it easier than ever for the investing public to buy Bitcoin. Today's episode is sponsored by Cake Wallet, where you can send, receive, and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys. Available today on iOS, macOS, Android, and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Good evening everybody, and a warm welcome again back to Enter Crypto with me, Chris Kenyon. Now in today's video we're going to be talking about the UK and the US. I found an article here from the Financial Times. Let's jump straight into it, see what we can learn, and then we'll comment after. So earlier this year, the US Securities and Exchange Commission, otherwise known as the SEC, have approved a series of Bitcoin spot ETFs, investment vehicles that offer exposure to Bitcoin, the world's best known cryptocurrency. The 11 newly approved funds, which are barred to UK investors, are issued by some of Wall Street's biggest names, including Fidelity and BlackRock, which is the world's largest asset manager. The January launch of these products propelled Bitcoin last month to a record high of $73,800 and has given it a sense of recognised legitimacy it has never previously achieved in its near 15-year history. Americans eager to invest in Bitcoin can now do so via highly regulated products rather than having to buy Bitcoin directly on offshore crypto exchanges that have controversial compliance histories. Wall Street's new funds, which have pulled in well over $10 billion in fresh capital in less than 3 months of trading, have prompted investors in the UK to question whether Westminster's own efforts to establish a digital assets hub in London have fallen behind. Whether the UK follows the US's path will determine if British investors can eventually include Bitcoin in their portfolios with the greater confidence afforded by UK regulated options. But the risks associated with this highly volatile asset mean an expansion into crypto remains far from inevitable. And this is really interesting between the two countries, because we've actually got quite good regulation. When I say good, I mean advanced regulation in comparison to a lot of other countries in two kind of different areas within the two countries. You've got the Brits who have are attempting to regulate the actual underlying cryptocurrencies. You know, what does it mean if someone sends Bitcoin from one address to another address? And so really regulating the sort of spot world of cryptocurrencies. And then you've got the US, who completely ignores that side at the moment. Or, they've made no attempts at creating any sort of new laws properly. But they have created they have given the green light for these ETFs so that people can have what you would say is crypto exposure rather than buying the underlying asset, even though the company that they bought it through will have to, at the end of the day, buy the actual asset. It's really interesting that the two countries have, because we're almost aligned on lots and lots of things, that we've taken a totally different approach to it than what they have, and it's a bit similar as leverage trading as well. We're not actually allowed to futures trade, leverage trade in the UK as a retail, but you are in the US, or in most states you are. So it's really strange how both countries are sort of dealing with cryptocurrencies in this way. I think though that the UK is probably going to wants to get a handle on the actual underlying asset, and then later, are they going to bring out ETFs? Now they're going to let us, well, they've already got ETNs, these exchange traded notes for, accredited investors, but not for retail. So, whereas in the US, because they've kind of gone through this security, these ETFs, they've approved these ETFs, but they haven't really done anything as far as regulation with the underlying assets are concerned. They are going to have to, because we can't be trading, ETFs and for much longer and be doing all this and then not have actual rules and regulation for the underlying asset. That would be ridiculous. Over the next few years, I'm talking, they're obviously not in a rush to do it now. But it is going to come. Whereas the UK may just never bring any ETFs. They don't have to now because they've got the regulation for the underlying assets. Whereas I would argue that the US is probably they're going to have to create laws for, specifically for crypto. So a really interesting article there, and if anything changes as the laws change or as they make amendments, I'll be sure to keep you updated. As always, guys, thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out on any future updates. And I'll see you all tomorrow evening. Take care.